Hey guys, welcome back. Today I'm going to run over institutional candles, and this is one of the hardest things to identify, and it's basically going to be a necessity for us to take entries in these markets. So, what is an IC, an institutional candle? Some people you might hear call them order blocks, right? All you have to understand is an institutional candle is a candle that causes a move, right? We want to always talk about cause and effect in these markets. Always ask yourself, what candle got me to here, right? So, in essence, the market moves in two directions, up and down. For us to go higher, let me get rid of this, hate this glitch, right? For us to go higher, let's say, do this again, sorry. We need to make higher high, higher low, higher high, higher low, so on and so forth, right? Now, I'm going to draw these dots at these higher highs and higher lows. This does not become a higher high or a higher low until a new one is formed. Hopefully that makes sense because, how do you know this is a higher low if it doesn't get above this high? It could just go straight through. So when we, see this, you can see the market is continually breaking structure and making a series of higher highs and higher lows in sort of a staircase pattern, as you would call it. Now, your IC, your institutional candle, would fall somewhere in this range here. Because remember, like we spoke earlier, the banks want to buy low and sell higher. But they need to give themselves somewhere to buy from. So we also spoke the banks pump orders down before continuing up. They buy to sell and sell to buy. That formulates your institutional candle. So your institutional candle could be the last down before the up, last up before the down. So in this case, the last down before the up. What does it look like? Something like this. The last down, red candle before the big break up. The market comes into it and it buys off again. And that is how you will trade in these markets based upon your institutional candles. So if we look at GU, I've just pulled it back into a random time. I'm on the daily time frame, right? Let's mark up what's sort of happening. GU comes off up here and it distributes and it makes a low, right? Pretty clear to see that. If you want to mark up, the swing low, it was probably under here, getting lower. Pretty standard there. Once that occurs, watch what happens, right? You sort of have this, where is it? Push up here, and then a sell-off. So if I want to mark my high and low, I got a low, and I have a high, right? Now remember, I want to see it give me a lower low, so then I can anticipate a lower high, right? So remember, we need to see that go lower for then this to validate this is the high, right? Because at this point, we are trading within this high and this low. Anything can really happen here. Now, I'm just going to play it a couple days, and I want you to just focus on what sort of happens. So you can see there, right? You can see there, we do what? We break. So now, notice we have, this is the high, this is a low. Now this is now a lower low, and we are going to probably get a lower high because you want to continue that staircase structure down. Now you have to ask yourself, which candle got you that low, right? Now it's the last up before the down. And I'm going to draw it off right here. Draw a little box right there for you. Now, many of you might, question, well, Justin, isn't this the last up before the down? 100%. You're not wrong. This is where you need to have an entry criteria, and we'll run over this, and you need to identify which ones are stronger. But remember, on the daily time frame, this is the high, this is the low, not this. Meaning, price can still come up to this area here, right? So let's just play the market out. Watch it pull back, sort of hitting that area that we spoke about, and it's dropping a little bit, but it trades through, gets into that area there, and then continues down, right? Perfect. And as you can see, on the way down, guys, it's done what? Given us more institutional candles, right? And that is where we are sort of at today in the current market conditions. So last up before the down, or vice versa. Last down before the up, and continues going, right? Nice and simple concept here, and you can see this happen day in, day out, right? The market will continually come back to those areas, right? If you look in here, the last down before the up move, market will trade back in and continue going higher. So how do we trade that? We'll run over that in a couple more videos on how to precisely enter in these. Now, you want to be entering on the open or 50% of that candle. So yes, you could have had a limit here, a sell limit with stop loss above the high and targeting the lows. But as you can see, I would have only made around, 5% in such a long period of time. And we don't like that. So we're going to run over soon how to make those entries a lot better. So I hope you guys learned what an institutional candle was here and how to properly identify them.